If you own rental properties, but you don't want to leave them to your heirs, listen to this. Now, I made a video recently talking about how, should you actually leave them to your kids? And this sparked a conversation where some people are like, you know what? Further looking into it, that's actually not what I want to do. I don't want to leave my rental properties to my kids. Maybe they don't want them. Maybe, life changed. I don't have heirs like I thought I would, stuff like that. Now, if that's your plan, if you're like, hey, whatever, let's just say your kids do not want to inherit your rental portfolio and you're wanting to at some point retire as a landlord, pay attention to this part. So the government the government likes to give benefits when you own real estate. Specifically, when you own rentals, the tax benefit of depreciation is really helpful, right? We get to take a paper loss and that's helpful, right? But the minute you decide to no longer keep those properties, Uncle Sam, that benefit then turns into an issue. And it can be quite a large issue. The minute you decide to sell, there are now consequences, specifically tax consequences to selling. Many times, a lot of landlords are afraid of retiring because they're afraid of the tax ramification. For example, if you decide to sell, and this is especially important if you've owned the property for a long time, I'm talking 10, 20, 30 years. And then also, if that property has appreciated a lot, so it's gone up in value a lot. Now, with that being said, it's important to understand that there's generally two consequences. The first one is long term capital gain. Okay. Again, this is important if you have the property is appreciated in value or you got it, especially if you bought it for really low, it's appreciated in value, stuff like that. The second one is depreciation recapture. This is a really important consequence if you've owned it for a long time or if you've done some of those advanced tax strategies like cost segregation or bonus depreciation. That may sound like a different language to you. I promise it doesn't to your CPA. So this is going to be based on your specific situation. Not all landlords who are selling are created equal when it comes, to the eyes of the IRS. Now, so again, when it comes time to sell, if you want to retire as a landlord, there are literally landlords who, again, they're afraid of retiring because of the tax ramification. Depending on your situation, depending on your tax bracket, you could owe Uncle Sam anywhere from 30 to 50% of what you are expected to make. Let's just say you've got a portfolio that when you sell it, you would walk away with $1 million. But what if you had to write a check to Uncle Sam for 300 to 500,000 of that? Oof, made me want to barf right now just thinking about that. Now, maybe you say, Courtney, I worked too long and too hard for this to be the case. I do not want to write that big old check to Uncle Sam. Sure, there are definitely benefits like there's things like a 1031 exchange where you could basically defer that tax hit, that you would have the check you'd have to write um, by buying another investment. But that doesn't, that's generally difficult if someone wants to retire from being a landlord. So let me teach you about a hack that I love. You see, I often say I've helped a lot of people become a landlord, but I've also helped a lot of people, I guess, unbecome a landlord, retire from being a landlord. So let me show you this hack. It's one of my favorites. So if you're listening on Spotify or another place where you listen to podcasts, this is going to be one of those episodes if you want to, you're going to want to watch it. Please share my screen. All right. Fun fact, did you know that Uncle Sam has PDFs on their website that you can actually print up? So I've got the printable version here of publication 537. This is a 30-page PDF that Uncle Sam, the IRS, has created with their thoughts on installment sales. And installment sales, this is a version of seller financing. So this right here, I cannot tell you. First of all, I keep this in my office. So I'm showing it here on the screen, but I actually keep this here in my office in some of those clear, so it's in like a folder with some of those clear sleeves. And I've got this in there. Cannot tell you how many times I have brought this to a sophisticated seller wanting to retire. So what this does is it goes over how Uncle Sam sees the income of selling on financing. And it breaks it down and, all those things. So it says, like, what is an installment sale? An installment sale is a sale of a property where you receive at least one payment after the tax year of the sale. So ultimately, again, it's a form of financing. So with that being said, guys, look, this is a 30-page. I mean, like, um, it's literally breaking it down. Obviously, this is some, IRS CPA talk here, but let me give you a little tip. Now, I'm going to stop sharing my screen, but look, if you go at the very top, irs.gov, this is publication 537. And if you see, it's for 2024 returns. Every year they come out with a new one. I think the last one was 22 pages, so this one's longer. So make sure you get the most up-to-date year, because there may be some new things in there. All right, so you can access that for yourself. That is something that you just want to make sure that you have, that in your back pocket. Now, I cannot tell you how many times when I've had a landlord who wanted to retire, and especially if they were a sophisticated landlord, right? Like, they cared about the tax implications. I showed him that document and I said, "Hey, have you talked to your CPA? Look, I can make you an offer, but would you be open to a tax advantaged offer?" And I generally will show them that publication. And a lot of times I say, "Hey, send this to your CPA. Say, hey, I'm thinking of selling the rentals, or maybe I'm looking at selling these 5 rentals. Would it benefit me to look at a tax advantaged offer like an installment sale?" And send that PDF to your CPA and see what they have to say based on your specific situation. I cannot tell you how many times that they've done that and the CPA goes, "Absolutely, yes, this would benefit." And there's even times when, if I'm working with a seller on if they're wanting to retire, and I'll say, "Hey, look, if we do the deal together, set an appointment with your CPA. If we do the deal together, I'll pay for the cost of the meeting. Maybe the CPA's hourly rate is $150 an hour. I'll pay for the meeting with the CPA if we do this deal together." And I've actually gone and sat in the office with a CPA, or gone over the phone, or like a Zoom meeting or something like that with the CPA with the seller, and talked about how I could structure a deal that could be beneficial. And so if you're thinking, so I'm speaking about this to investors, maybe you are looking at making creative offers. Remember, if you can solve people's tax problems, you can work your ways into the solution that is beneficial for both parties. But if you're looking at retiring and not wanting to leave your kids the properties, you could leave them payments. And those payments, as my mentor Leon Johnson says, he's like, instead of the day that you die, people remember you, or maybe remember you on the holidays, maybe remember you for your birthday. Instead, now they're receiving a check every month on the first of the month. And that is, imagine, instead of just a memory of you, they're now getting money, right? So, like, that's always a good positive thing. The first of the month every month, and they can say, "Thank you, Dad. Thank you, Mom," without having to chase down tenants, without having to make sure that the roof is current or doesn't need a repair, right? Without having to handle a property manager or insurance going up or property taxes. So none of those things. They get the benefits, the fruits of the tree, without any of the hassle of the upkeep. And so I cannot tell you how many times this has been a great opportunity. And there's some tax advantaged ways that, if the deal is structured right, it's actually beneficial for both the seller, and the buyer. So hope this was helpful for you. Look, that publication 537, I use it all the freaking time, especially the number one place I use it is when someone wants to retire from being a landlord. You should go check it out yourself and let me know your thoughts. Thank you, guys. Make sure to subscribe. Another day, another video. Love breaking these down for you guys.